Okay. Shall we go on to the accounting aspect? Great. So I have around 40 entries now. So I will start accounting them. Okay. What we'll do is, yeah, 15 minutes in. Okay. I'll pause every 5 entries. And if you have any doubts as to how the entry was passed, you can ask me. Okay. So remember the 4 steps, right? Sorry, 3 steps. And we'll be going through these 3 steps continually for 40 times today. Okay. So now while I'm going through these entries, right, I will tell you what mistake you made while preparing the transactions that you made. Okay. So first, capital investment 30 lakhs, 1 lakhs in cash, 29 lakhs in bank. What some of you did was you just mentioned capital invested 1 crore, 2 crore, 5 crore, etc. You say capital is invested, right? But what exactly did you give to the business? Because the business has to receive something, and it has to be something like cash or maybe a check or maybe goods or maybe a table. It has to be something, right? You can't just call it capital, right? So in this case, the transaction has a total of 3 accounts involved. Okay. So one is cash account. The next one is a bank account, right? And this is an SBI bank account. We'll call it SBI, right? Or rather, it's better to put it this way, right? And it has capital account. So when we try to classify these, we'll classify cash as an asset, right? SBI bank account is also an asset. Capital is something we call equity. As of now, equity is like a liability. Okay. Now, we have identified the 3 accounts that are involved. The business gets cash, cash is an account. The business got a check from the owner. So SBI, the bank account is the second account. And the third is a capital account. So we've done the first step. And we've also classified it as well. The third is to debit or credit. So who is that who is unmuted? Do you have a doubt? Okay, I'm continuing. Right. So the business has gotten cash. Cash has increased. So when you get an asset and an asset increases, you debit, which means under the debit column, so DR is short for debit and CR is short for credit. Okay, just FYI. You mentioned 1 lakh because you've received 1 lakh in cash, right? So what this means, you're saying cash account debit 1 lakh. So cash account, it's an asset is increased, so you debit it and you're mentioning it in the debit column. Similarly, let's go to the same rules. SBI bank account, it's a bank account, it's my asset. My asset is increasing because I'm receiving cash, right? Which means it should be debited, right? Now, capital. This might be a little tricky, but remember what I said about the business treating an owner as a third person, right? So the owner is giving the business money, which means the business owes the owner the money back, right? Which means the owner is like a liability. But I will explain later why we call an owner as an equity rather than a liability. But as of now, just simply remember 2 things. Owner is called equity, and equity is just like a liability. Okay. So when we have a liability and the liability increases because I have to owe somebody, the debt I owe to somebody or the equity I owe to somebody is increasing and you credit. The rule says you should credit, right? So that's 30 lakhs. Okay. So let us try to understand what we have just done. So we have a transaction here. The owner has given the business 1 lakh in cash and 29 lakhs in bank as a check, right? So we had 3 accounts we identified for this transaction: the cash account, the bank account, and the capital account. 2 asset accounts and a liability. As an equity account, which is treated like a liability. So we saw how they moved. Since the business got money, the asset increased, which means we debited them. And since the business owed the owner, we are crediting the owner, right? So at the end of the journal entry, all the debits and the credits are equal. So now we type something called a narration. Um, if you are from PSBB, okay, typically they ask you to type the narration with the word starting with being. Being capital of rupees 30 lakhs invested into business, right? Rupees 1 lakh cash and rupees 29 lakh check. So the reason for this narration is, let's say you have 15, so there are 15 different days in a year in which the owner has given the business money. You want to figure out, so you might even mention the check number, say some random number. This piece of English here will help explain the substance of the transaction. So this transaction won't tell you on what date he gave you. As in, you should mention the date here. It won't give you the date of the check. It won't tell you which. Say for example, say you make a sale, right? The sale won't tell you how many units you sold. There are some details which can't be expressed in monetary terms. So you need English to explain it, and that explanation will be mentioned as a narration. This is called a narration. So this is the first journal entry we've seen. Are you clear with this idea? Anybody has any doubts? Great. We'll go ahead. Next. So guys, this is the format, okay? So you have date, particulars, debit, and credit, 4 columns. So since I'm just having numbers here, I don't have date, but typically you'd mention date. Oh, sure, no problem, bro. Sorry, I'll go slow. Definitely. I got it. Okay. Uh, sure, done. Right. So you have date, you have particulars, debit, and credit. So you mention your account names in the particulars column. You mention the debits in the debit column, and you mention the credits in the credit column. So I'm typing this part, this entire text here, to just help you out, okay? So this is something that you don't need to do. The transaction ends here. The journal entries ends here. That's it. That's all the journal entry is. Everything else is just to help you understand how a journal entry is passed. Okay. Let's try to pass more journal entries and try to figure out how this happens, okay? So here, I'm purchasing the rights for technical know-how from Intel Corp. So technical know-how is basically, say for example, I want to manufacture a car, but I need to know how to manufacture a car, right? So I need, blueprints, schematics, some sort of research done on it, a bunch of information. I need the technology, but say I don't know how, and there's a Japanese company that knows how. I will pay the Japanese company some money to get a right over the technical know-how. So they might have spent money on research and figured out how to make a car engine. So they will give me that knowledge, or they might lease it to me, or they might let me use that knowledge for a certain amount of time that's based on the contract. And this is called technical know-how. So technical know-how is an asset because I'm getting benefit from it. So because I have technical know-how, I'm able to manufacture cars and I'm able to sell them. So it gives me economic resources. And let's look at the other half of the coin. It can't, so because this gives me, benefits over a period of time. This is going to be there for say 5, 6, 10 years. It's not just going to expire in the next 2 months, right? It's going to be there for many years. So it's not an expense. An expense is something that, you get the benefit of it within 12 months maximum. This is not an expense. It is not an income because it's not like a sale, and it's definitely not a liability. So we have technical know-how, right? Account. So this is an asset account, and we call this an intangible asset. Just giving you a piece of information. The type of account is an asset account, and the next account we have is Intel Core, and we are purchasing it from them. Here, we have not been told whether we have paid them the money yet. This simply says I purchased the right. Okay. So as of now, all I know is I purchased it from them, which means I owe Intel Core 2 lakhs. If this text had told me paid via cash, paid in check, some sort of information about whether I paid them, I might, like take it into consideration. But it has not told me any such information. It only told me I purchased it right. So technical know-how account and Intel Corp account, right? So Intel Corp is a liability. Why are they a liability? A liability is an obligation that an enterprise has to pay. So the business has to pay Intel Corp at some time in the future rupees 2 lakhs for letting us use the technology. So these are the two accounts. That's step one. Step two, we have classified them. Step three, we should know what to do. So rupees 2 lakhs, right? So the business is getting an asset. The asset is increasing, right? So I'm debiting the asset with 2 lakhs, right? A liability, the business owes Intel Corp. It owes them 2 lakhs, which means it's a liability for the business. Intel Corp is a creditor. They are a liability. So when a liability increases, I credit, right? 2 lakhs. A narration being you don't have to mention the value here because that's already received from, that's already accounted here. That's the logic behind the second transaction. So let's look at the third one. Right. So let me put using check. So here, this transaction is telling me I am paying Intel Corp using check. So a check is given, which means the bank account is used to pay, which means my bank balance reduces. So the two accounts that are involved in this transaction is Intel Corp and my bank account. So Intel Corp. So remember here, we have already created an account called Intel Corp. So it should be the exact same words as what we have already created because the account we're talking about, Intel Corp, is the same account, right? And the bank account. And similarly, SBI bank account. We had opened it earlier above over here, right? So these are two accounts involved. So Intel Corp, we know, is our vendor, which means he's a liability. And SBI bank, obviously, it's my asset, right? Right. So now, when I'm paying somebody money, my asset reduces, right? I'm paying using check. I have an asset and the value is reducing because I'm paying somebody. My bank balance reduces. And when my asset reduces, you credit it, right? When an asset increases, you debit, and when it decreases, you credit, right? So I credited with 70,000. And in this case, my liability is debited. Why is it debited? Because my liability is reducing. Intel Corp, initially I had to pay them rupees 2 lakhs, right? Because I purchased technical know-how from them. So after I pay them 70,000 rupees, I won't have to pay them 2 lakhs. I'll have to pay them 1,30,000, which means my liability is reducing. What I owe them is lesser, right? So because the liability reduces, we end up debiting the account. So Intel Corp debit 70,000. So the transaction is balanced and the narration is being payment to Intel Corp via check. Some number, check number, dated. Okay. Next, renting the building. So in this case, my business is I need a place to run my business. I have found a building and it's vacant and I have to pay a rental deposit. So people call it an advance and in accounts we call it a rental deposit. So say I'm paying rupees 1 lakh to somebody as a deposit. And this is a refundable deposit. So once I vacate the building, I will be receiving this money, right? So let us try to identify the accounts. So one is a rental deposit account, and the second is, let's say I'm paying this again in check. Let's say NEFT transfer, right? Second is bank account, SBI bank account. Once we have identified the accounts, next. So we know this is an asset account. What about rental deposit? So let's try to classify. It can't be an income or an expense. It doesn't make sense because so it's not an income because I'm not receiving anything, and it's not an expense because I will be receiving back this deposit. So this deposit is probably over a period of time, right? I'm going to stay in the building for a few years, maybe, definitely. So it is an asset because I'm using this building, I'll be able to make money, and economic resources will flow to my business, and I will be receiving this deposit back. I'm going to receive some benefit from it. So this is also an asset, right? So let's try to identify what happens. When I'm paying the deposit, my bank balance reduces. So my asset reduces. So when your asset decreases, you credit the asset, right? You credit the specific account. And the rental deposit account, the value increases. So I debit it. So to understand how this works, it's pretty simple. So when I say that my asset increases to 1 lakh, it means that I have a deposit with somebody and they have to pay me back at some point of time. They owe me. So it's my asset and the asset value is 1 lakh. So I'm debiting with 1 lakh. So that's it. I think that's it for this transaction. Being building. You can maybe type the address if you want. NEFT, ID, whatever. So basically give details for the transaction. Say I'm purchasing machinery. So the two accounts that are involved here. So we note again that I'm not paying this time. I'm not mentioned in cash, check or anything, which means I will still owe X Limited 8 lakhs after I purchase the machinery. So there are two accounts here. I have machinery, right? And I have X Limited. X Limited in this case, it's not a person, it's a company. So machinery is an asset because I will be using the machinery to get economic resources into the business through sales, by manufacturing things, etc. And X Limited is my liability. He is my creditor, right? Because I have to pay him 8 lakhs in the future, right? We've classified it. We've identified the accounts. We've classified them. So now machinery account, asset, it increases, right? We notice that as it increases, you debit, and that's 8 lakhs. And liability increases, so we credit. So this transaction tells us, okay, I've gotten an asset. The value of the asset is 8 lakhs. And because I have an asset now and I had nothing before, the value is increasing from 0 to 8 lakhs. And because it increases, asset, you debit it. Similarly, I had to pay Mr. X Limited 0 before. Now I have to pay him 8 lakhs. So he is a creditor. A creditor is a liability. When liability increases, you credit the liability. And of course, the narration is being machinery. You can type the type of machinery, type of, say, let's say, some sort of punching machine, something. Just okay. Any doubts up until now? Is this slow enough, guys, or would you like me to repeat anything? Okay. I'll continue. And again, if you have any doubts, wait. Every file transaction, I'll stop so that you can ask me something. So let's see how we go forth. Right, buying raw materials. So the key to kind of cracking this is just following this 3 steps rigorously, because if you at any point of time skip one of the steps, it's easy to kind of get confused because uh, this is kind of like you wake up one fine day and just clicks in your brain sort of deal. So keep practicing, keep applying the rules, and you will get it eventually. Okay. Um, stay strong. We have like 40 transactions. I'm sure at the end of 40 transactions, you'll have some idea about how this works. Okay. So we buy raw materials from Gentro Enterprises. So there are some accounts. So until now, we've just named the machinery, X Limited, etc. Right? Some accounts we have a specific name that we use. So when we purchase raw materials, right, we are making a purchase for the business. So when we purchase, say, a furniture or a computer, we are not planning to sell it. We are not planning to manufacture using that asset. But in when you purchase raw materials, right? When you purchase, say, packaging material to package your sale product, those are purchases you make for the business. So they will affect your profit. So you call these purchases. You have to use the specific account called purchases account, right? You debit it. We'll come to again. We'll follow the rules. And the second is Gentro Enterprises because we're not paying them yet. It's not mentioned anywhere in the text. Gentro Enterprises. So we have identified the two accounts. Let's classify them. Purchases account. I'm going to go ahead and call this an expense account, right? We will have a discussion later as to why is it not an asset and an expense, okay? But as of now, this is an expense account because I'm making a purchase and I expect to sell it. So I've spent money and it's an expense. And Gentro Enterprises, because I have to pay them money in the future, they are my liability. So I make purchases and they are my creditor and it's a liability, right? So when purchases increase, right, I debit. When assets, when expenses increase, you debit them, similar to assets. And when liabilities increase, you credit them. And the value is 5 lakh. And again, being materials purchased for batch one. Okay, let's go on to the next transaction. Okay, guys, if you're if I'm going a bit too fast and you're not having time to write it, don't worry. The thing is, I don't want to extend the session like we did last time, and so I'm going. So if you're not able to write as fast, don't worry. Just concentrate on what I'm saying because obviously I'm sharing this Excel with you, and you can go through it later. But the main thing is try to understand the logic behind the entry. Okay. Okay. Salary for workers and staff. Let's, as of now, presume these are admin employees, as in the employees who work in the office, not the factory. Okay, there is an important difference there. I'll tell you later. But as of now, these are people who work in the office. So the two accounts involved are salaries account. So we'll call it wages and salaries. And second is bank, SBI bank account. So we know that this is an asset, right? This is an expense. Paying salary for the business, salary is an expense. If you want to go by the definition, when I pay employees, they work for me. They help me sell. They help me, like maintain. They help me account. They help me manage my employees, and they help me earn revenue. And since it's a cost incurred by the business in the process of earning revenue, it's an expense. So back to the rules. When expenses increase, you debit. And when my asset is decreasing because I'm paying them, I credit. That's the third step, which means 1,50,000 in the debit column and 1,50,000 in the credit column. So the format of a journal entry will typically have you, write the debits on the top of the journal entry and the credits in the bottom. So you wouldn't ideally. The thing is, it's not wrong to say I write something like this because the instruction is clear. I want to credit SBI Bank and I want to debit salaries and wages. So there's a very specific format here, and to not hurt that format, we are going ahead with debits first, credits later, right? So say for example, you have 5 accounts that are involved and there are 3 accounts which are debited. You'll mention the first 3 accounts and debit them and therefore credit them. And remember, your transaction should always tally, okay? And paid salary for first quarter. Let's go to the next transaction. Packaging material. So here you should be a bit careful. You can call it a purchases account, but then you won't be able to differentiate between your raw materials and your packaging materials. So let's call this packaging material purchase account, just to be able to differentiate between your accounts. So the very fact, the very reason we are doing this process is to be able to make our lives easier. If we put different types of transaction in the same account, right, it doesn't make sense for us because we'll have an account. Say we mentioned this in the purchase account. So a purchase account will have, so what the value of this account is 80. This transaction is 83,000, right? And this is about 5 lakhs, this purchase. So we'll have a balance of 5,83,215 in our purchases account. And we'll be thinking, okay, I have 5.8 lakhs worth of raw material to process. But that's not true. I only have 5 lakh worth of raw material. So we want to help our accounts reflect the best, like situation possible. So we try to be as creative and precise with our account naming and account creation as possible. Okay, so the second account is I'm not paid him yet. I'm purchasing on credit. So Mr. Y account, right? So I've identified the accounts. So similar to what purchases was, this is an expense. And Mr. Y, I owe him money. He is my creditor. He is a liability, right? So I've identified the accounts. I've classified them. Now let's go for the rules. So I'm purchasing packaging material. So I have material in my hands now, and I didn't have it before. So my asset or my expense is increasing. So when an asset or an expense increases, you debit, right? And Mr. Y, I owe him money. I have to pay him money tomorrow or in the future. So when a liability increases, you credit, right? So being packaging, some sort of film, say packaging film purchased. So I'm just giving an example, but typically they will give you the information about the transaction in the text. Okay, so don't imagine things and write them here. You will be given the information, and if at all you're not given information, just basically type the write the entire transaction again without the value. That's it. This is at this stage, this might look like a formality for about half of the transactions, but in real life, narrations are very important to understand why a journal entry was passed. Because without this narration, you won't know that it was a 29 mm say film purchased, which patch it was purchased for. There are many sorts of information that you might need, which are given by a simple line of text, which can't be given by a transaction, right? So that's just for your information, just a small idea there. Furnishing the showroom, and let's say when I'm saying purchased, serviced by. Basically, they provided me the service. So this transaction doesn't tell me I've paid them yet. So they are my creditor. So in this case, we use a word called furniture and fittings. So that's just an official term, right? It's not a mistake if you call it. So first of all, you can't call it interior designing account because the name of the account should reflect the nature of the account. So if you call interior designing account, somebody who is totally new to the business will think it's an expense account. So, but if you name it furniture and fittings, or if you call it showroom fitting account, it will reflect the nature of the account. This is an account which is representing the interior designing that I've done for my showroom. And the second account, obviously, because I owe somebody here, right? It's the creditor. So to classify it, this is an asset. So this might be a little tricky for some of you because it makes sense to call a building an asset. But if I'm, say, for painting the building or doing some sort of mechanic, some sort of repair, how can you call it an asset? So it's an important distinction here. Say I have a building and I have to, so I'm trying to have an office space and I have to I have to build cubicles, right? I need cubicles for my employees to be there. You can't call it an expense because they are going to be there for many years, right? It's not just something you spend for this accounting period. You won't reap the benefits of those cubicles in just 1 year. They're going to be there for say 2, 3, 5, 10 years, depending on how good they are, and they are constantly going to be giving you economic value because you're using them, and as you use them, your employees will work, you'll get money. So these are assets. Interestingly enough, if you were to say, if one of the cubicles, say one wall was broken, and you're fixing that wall, that will probably be an expense because that's a repair. And this is where you have to understand it will take time, but you will eventually figure out what is an expense. A repair is an expense, but a purchase of, say, a fitting or furniture is an asset. Because the repair is something you're not creating a new asset, you're just fixing the table, right? You're not getting a new table. So that is just to keep it in place. That expense, the repair expense that you're having is just to keep it in place. So again, we'll see repairs in a few transactions below. So as of now, furniture and fittings, asset, and designs private limited, I have to pay them money, liability, right? Asset, it increases, and purchasing it, right? So it increases at debit, and liability, it increases because I have to pay them money. It's a credit, right? And it's 457, sorry. Right. So here on out, I'm not going to type the journal entry, just with the narration, just but please do remember to type it out because this will be given marks in your exams as well. If you don't write the narration, they will be cheap enough to remove some marks from you. So it is very boring. So 90% of the time you'll just be writing the same text as above, but it is necessary. So just remember that. And there is no rule for the narration. So it's just English. You're just telling what the transaction was. Okay. So paid X Limited using check. So who was X Limited? If you remember, we purchased a machine from X Limited. So X Limited was our creditor and we owed him 8 lakhs. Now we are paying Mr. X, with the X Limited, 5 lakhs. So the two accounts involved are, first step, X Limited and SBI Bank account. Right. So SBI is an asset, it's my bank account, and X Limited, as we saw before, is a liability. Right. So I'm paying somebody, my bank balance reduces. So as it reduces, you credit. We mentioned 5 lakhs. And X Limited, I had to pay him 8 lakhs before. I'm paying him 5 lakhs. So I have to reduce my liability to him, which means I have to debit 5 lakhs. So I will only owe him 3 lakhs now because I owed him 5 lakhs. I had a credit balance of 8 lakhs with him over here first initially, right? This transaction, this journal entry told me that there's an account called X Limited. I should credit his account with 8 lakhs, right? Which means I owe him 8 lakhs. So this transaction further down below, this journal entry tells me, okay, you had a credit balance of 8 lakhs before. Now you're paying him 5 lakhs, which means you debit him with 5 lakhs. So you have a credit of 8 lakhs initially. So think of it, you can, if it helps you understand, think of a credit as a negative value. So you had 8 lakhs before, right? Now you have to debit him with 5 lakhs. So now he has a net balance because it's a negative balance, credit balance of 3 lakhs. So that's just like a math problem. So again, don't get too tensed about this. We will understand more about how balances work when we go on to ledger accounts. So as of now, just understand that this transaction is telling me that my liability towards this X Limited is reducing. So when liability reduces because I'm paying him, I'm debiting the account. Okay. 10 transactions done, guys. Any doubts as of now? Yes. In a journal entry, which is a double entry, right? What we are trying to bring in is there should always be equal debits and credits. So that's why there's something called a balance sheet, right? So at the end of the day, a balance sheet will have assets and liabilities which will equal each other. So they will balance. So that's the idea. So typically, if you follow these rules, you wouldn't have to worry about them being equal because the rules will take you to the scenario where they are equal. Sometimes you may be put in a scenario where you might have something like a balancing figure. Say you have 5 different accounts, right? And you have different values, debits and credits. So you have to figure out the net value. Say you have rupees 5 lakhs worth of debits from 3 accounts and 2 lakhs worth of debits from one account. So there are 3 accounts with 5 lakhs debit and one account with 2 lakhs credit. So that will give you the fifth account's balance because you know that the journal entry has to tally. So 5 lakh debit, 2 lakh credit, which means I need 3 more lakh worth of credit to balance it out, right? But as for now, I don't think we'll be seeing such scenarios. Go with the rules, and the rules will take care of you. We clear? Awesome. I'll go ahead. Okay. So okay, we finally started to make a sales. So here there are 2 accounts involved. One, I'm making a sale to Gyro. Gyro has not paid me yet. There is no information about them paying me. They're simply saying, I've made a sale, which means that Gyro is my customer. Gyro Incorporated will owe me money. So every time I say me, guys, just a simple reminder, when I say me, I'm the business. Don't think of yourself as the owner, think of yourself as sitting inside the business. So I make a sale, Gyro Incorporated customer owes me. So a customer is an asset, right? So Gyro Incorporated is one account, and the second account is sales, right? Right. So there are 2 aspects here, and guys, it's easy to get a little confused here. So let's be very clear. So we identified 2 accounts here, right? One is my customer, and the other is a sale. So Gyro Incorporated is my customer, right? He's going to pay me money tomorrow or in the future. So he's an economic resource that flows to the entity. He is an asset, right? It's a debtor. Sales. Sales is, as we know, an income. So when I'm making a sale, I get income, right? So before I didn't have anything. Now I have 15 lakhs income. So when my income increases, you credit. So sales account is sales account is my income, which increases, so you credit with 15 lakhs, right? And my customer. So yesterday he didn't have to pay me. Today, because I made a sale, Gyro Incorporated owes me 15 lakhs. So when an asset increases, you debit the asset, 15 lakhs. Right. So this is a sort of case where a narration might help. So being sold 5 units of product
this sort of information. If you look at just the journal entry, you might not know this, right? You could actually go up to a level where you mention the serial number of the product that you're selling. Say, if you're selling computer parts or some products have serial numbers, right? You can actually mention the serial number of the product you're selling in the narration so that you'll be able to map the specific sale. And narrations are especially useful. Say you're having 100 transactions and there are 30 sale transactions and you figure out, okay, I have actually accidentally made a mistake in one of them. One of those transactions should have some other value. How do you figure out which transaction it is? So you can look at the narration and you will know, okay, I sold on this date and I sold to this person these many products with this serial number. So to track through the narration will help identify which journal entry you have to correct. Just a simple example, sales, right? So we have account in sales. I'll just explain this once again, just to help you understand. Because sometimes what you would instinctively do is call Gyro Incorporated as sales. You'll call Gyro Incorporated as income. It doesn't make sense to call a company or an individual as income. Similar to, I can't call Mr. X an expense. It doesn't make sense, right? If I have to pay them, they become my liability. If they have to pay me, they become my asset. But in no scenario can they be my income or an expense. Okay, so I make a sale to Gyro Incorporated. First, we identify the accounts. There's an asset account and an income account, right? My customer is my asset and sale is an income. And because I'm making the sale, my sales increases, income increases, credit, and my customer owes me money, my asset increases, debit. So that's how we go about this idea. Okay. Next we have, so here onwards, I'll maybe go a little bit faster. John, you can maybe start putting a little more focus on the name of the account that I. Okay. Yeah. You'll be able to catch up with every account, every transaction as I go about it. Don't worry. Electricity charges. So this is a straight, like clear shot payment. Okay, two accounts involved. So EB charges. You can also call them electricity expenses. I'm just calling them EB charges and SBI bank. Right. So one is an expense, right, and the other is an asset. So this is simple. EB charges. So electricity, I'm paying the electricity board, right? It's an expense one. It's not an asset because I'm not storing it, right? And if you remember, it's not a resource. A resource is something that I have and utilize. EB is like, you can call it a simultaneous transfer, right? You can't store it. Okay, when I say you can't store electricity, please don't say you have a battery, okay? What I mean is, I pay the money for electricity that I've already used, right? I'm not going to get benefit in the future. I've already received the benefit as I have used it. So this is an expense, and EB, my expense is increasing, right? Because I'm incurring the electricity charges. An expense increases, your debit. My asset decreases, credit. Excuse me, right? And this is 1,50,000, right? So here it probably mention number of units or some information like that. Okay, transport charges. So remember, when you're accounting transport charges, it is important to identify the transport charges that you've incurred to bring your raw materials to your premises, which means, say I made a purchase and I have 15 boxes that I have to get to my factory, and I'm getting a lorry and asking them to bring to my factory. That is something called carriage inwards. It's a specific term, okay? It's nothing, it's just like something you have to remember. Carriage inwards, right? And if you have those transport charges that you have to sell, to take, for example, you have a customer, you have sold them, say for example an AC, you have to send this machine to the house, right? And let's say typically in businesses like TV, fridges, AC, you deliver them. So the expenses that you incur to deliver them, the money you have to pay to the lorry guy or the the vehicle person. The money you have to pay them, you call it carriage outwards. So specific words, that's kind of why I'm trying to bring your attention, what I'm trying to bring your attention to. Okay. So let's consider this transaction. Carriage inwards and I'm paying in cash. So cash account. So cash account, we know it's an asset, we have cash, and carriage inwards, it's an expense, right? So cash, it reduces because I'm paying somebody, so I credit it. My expense increases, right? Because I'm incurring an expense, so debit it. So this is maybe a good time to kind of introduce one small idea. So whenever you have an income or an expense, you can kind of think of it from a point of view where an income or an expense affects your profit. Okay, say you make a purchase will affect your profit. You make a sale affects your profit. You incur an expense affects your profit. An asset or liability will not affect your profit. Say for example, my cash increases, right? The fact that my cash is increasing will not affect the profit. Why is my cash increasing? Am I receiving money for a sale? Am I receiving interest? You know, that aspect of the transaction is what will affect the profit, right? Because interest will affect the profit. So you should be able to figure out what aspect of a journal entry. Say if I'm receiving cash, right? Receive cash for interest on loan given, right? So the cash account and interest on loan account, right? So I receive cash, my cash increases, I debit, and interest on loan is an income, right? Because I'm giving a loan and they're paying me interest for the loan I have given to them. So income, when income increases, I'm earning income, it increases, so I credit and say some value, just for example. So when the cash increases, you know that you've made some sort of benefit for the business. But the cash account does not affect the profit. It's the interest account that affects the profit. Because a cash account is an asset. An asset or a liability will not affect your profit. An income or an expense will affect your profit. So this is just maybe a point of view, like a place from which you can look at these transactions. Okay. So again, I'm just kind of giving you small ideas to go with as of now. Just remember them. If you are not able to grasp it entirely, don't worry about it. As we go along, we'll definitely be able to figure it out. Okay. Again, you can mention the lorry number, driver number, whatever you want. Okay. Blah blah blah. So I forgot to just type in the value. Okay. So this is also a similar transaction. In this case, I'm not paying cash. I have to pay somebody called Ravi, right? Mr. Ravi account. So identify the accounts. Carriage outwards, similar to carriage inwards, it is an expense. It will affect my profit. Mr. Ravi is somebody I have to pay, a creditor, liability, right? So because I'm incurring an expense, expense increases, debit. I have to pay somebody, my liability increases, I credit, and the value. Being okay. So we had sold 15 lakhs worth of goods to Gyro. So now Gyro is making a payment of 12 lakhs. So we are receiving it in cash, surprisingly. Okay. So the transaction here is I'm receiving cash from a customer. Okay. The two accounts involved are cash account and Gyro Incorporated. So in this case, both of them are assets. Right? Cash is an asset. Gyro Incorporated is my customer, my debtor, and a debtor is an asset. So I'm receiving cash, which means the cash balance increases. My cash account increases, so I debit the account. And my debtor, he owed me, right? He had to pay me 15 lakhs. Now he is paying me 12 lakhs. So to the extent of 12 lakhs, his debt reduces. The value of his debt to me reduces. So when the asset reduces, you credit, right? And it's 12 lakhs. Okay. So similar to what we compared before, right? Where is it? Ah. So if you remember, we tried to figure out what happens to the balance in X Limited. So we'll try to do that again, right? So Gyro Limited initially had a debit balance of 15 lakhs, if you remember, right? I had instructed to debit my asset, which is my debtor, with 15 lakhs because I made a sale, right? So a debit, remember, a debit balance implies that it's an asset. I expect to receive. That's the idea. An asset should give you an idea that the business expects to receive, and the liability should give you an idea the business expects to pay. Okay. So Gyro had a debit balance of 15 lakhs. Okay. The next transaction involving Gyro is this one. So initially I had a debit of 15 lakhs. Right. So now I'm instructing to credit with 12 lakhs. Right. So I remember you can imagine credits as negatives and debits as positives. So the net value is a positive, which means a debit, right, of 3 lakhs. Using common sense, I had made a sale for 15 lakhs. He's paid me 12 lakhs. He has to pay me 3 more lakhs, right? Which means I have a right to receive 3 more lakhs from him, which is a debit balance because he's an asset, because I have a right to receive. So keep concentrating on this idea of having, expecting to receive, expecting to pay, and you will, it'll start clicking. That's it. Okay. Deposited rupees 10 lakhs cash into my bank account. Okay. This is interesting. The two accounts involved are my bank account, right, and my cash account. Sorry. So both of these are my assets, right? So when I deposit cash, my cash balance reduces, asset reduces credit, and my bank balance increases, asset increases debit, and it's 10 lakhs. Okay. So here you can write FD number, maturity, interest rate. In fact, you can also mention the one second. Okay, don't worry about it. As of now, I've not mentioned anything about a fixed deposit. I've just told I'm depositing money into my bank account. So here you just presume it's your usual business bank account, right? So I'm sorry about this. Maybe check number, check date, something some information. Service of machinery. Okay, so this is where we come back to that idea of whether this is an asset or not. Okay, so I'm servicing my machinery, right? So this is a repair expense because okay, I'll put it this way. When do you say increase the value of the machinery? You increase the value of the machinery when you know that you're actually making something, you're making the machinery better, right? Say for example, the machinery now can manufacture 10 goods per minute, and you are spending some money to service it and make it manufacture 15 goods per minute. You're increasing the efficiency of the machine. That makes sense. I mean, in that case, you can increase the value of the machinery. Here, you're not doing that. Here, maybe you're just doing a regular service, right? So here we call this as an expense. This is an expense. Repairs and maintenance. Again, you can name the account whatever you want. You can also call it repairs account. This is the standard name that we use, repairs and maintenance account, right? So this one, and I'm paying in check, SBI bank account, right? Okay. SBI, this is an asset, this is an expense, right? So asset I'm paying decreases credit, expense I'm incurring, it increases debit. Okay, so 90,500. Okay. Customer service provided. One second. Okay. So when I'm providing customer service to somebody, they are paying me money, right? Typically, when a business gives customer service, let's not confuse ourselves with the concept of warranty right now. Let us presume that I maybe made a sale to somebody, I've sold a machine, and now I have to repair the machine for them. And I will give, give them an invoice for the repair services, and they have to pay me money. So this is service income. So you can call this, let's call this service income, right? So this is an income, and now Mr. Chaturvedi owes me, which means he is my debtor. So service income, this is an income, right? And he is my debtor. So I have provided a service, which means he has to pay me. Like, say, think of it this way. If I'm getting services for maintenance of my machinery, and that service becomes my expense, if I'm giving the service to somebody, so if I'm making a sale, that's my income. Similarly, if I'm giving the service, that's my income. Okay, so service income, and Mr. Chaturvedi owes me money, and he becomes my asset. So my income increases, so I credit. Again, the rules say so, right? Income increase, you credit, and my debtors balance increase, so you debit 1,60,000. Right? Advertising. You can maybe mention the invoice number. Right. Advertisements. So advertisements, interestingly enough, there are two arguments. Let's put it this way. I'll actually just start a poll here. Okay, how many of you think an advertisement should be an asset? Okay, before you vote, I'll just tell you this. An ad, let's presume this ad is going to run for say 2-3 years. Okay, and when I'm saying ad, let's say I'm having this big, you can see these big posters on the highways, right? There's this big stand, and there's this big picture of realtors or whatever. So let's presume it's going to be there for 2 years. So I expect it to be there for many days, which means I'm going to get benefit over a period of time, more than 12 months. So is it an asset or is it an expense? Okay, everybody thinks asset. Okay. There's actually an interesting argument behind this. It makes sense for you to think asset. The thing is, you can't know for sure, right, whether the benefit that you're receiving from people seeing that ad is something that you receive in say 2 years time or 4 years time, and you can't presume that. Okay, 1 second. Yeah. You can't presume that it's something that happens. Say, for example, people are going to equally see this ad in the next 5 years. It becomes something that's uncertain. So typically, they say that an advertisement should be treated as an expense, right? It's something of a common rule. Some people differ and say it should be an expense, so it should be an asset. But typically, you should consider it as an expense. And as we go forward and we understand the concepts of an asset and an expense deeper, I will explain this again, and you'll be able to understand it better. Okay. But as of now, we're going ahead with the fact that 1 second. Yeah. it's an expense. Okay, so add expenses account, and let's say paid in check. Should have mentioned that. Account and SBI Bank. So this is an expense asset. I'm paying, asset decreases, credit, expense increases, debit, right? So this looks like maybe the last transaction for the day because we've already gone past an hour. So we'll finish this up and we'll just clarify doubts if we have any. Okay. Right. Sponsoring. So let's say cash pay. So what does sponsoring mean? So I have a business. One second. Can you hear me better now?
Can you guys hear me? Perfect. I'll continue. So, say I have a business and I want to make my business famous. I want people to know about my business. So, this isn't like advertising, it's more like publicity. An advertisement is something where you try to understand. Let's put it this way. So, I want to advertise a product. I want to advertise, say, some sort of RD offer or some sort of big sale I'm having. So, I advertise a specific business activity. But when you say the word publicity, right? You try to publicize the business, the name of the business, the existence of the business. So that's when you sponsor. So in school you have businesses sponsoring your annual events, your culturals, right? Things like that. They sponsor so that they get a banner with their name on it, maybe their logo or whatnot. So sponsoring, I'm providing. So similar to advertisement, you can argue that it's an asset, but as of now, it is an expense because the day the event is hosted, people will know about it. But after that, they're going to bring down the banner, and nobody will. You won't get the benefit after that. As of that day, it's like it's not going to be like over 2 3 years, right? Sponsoring is for an event. An event happens on a day, and so you pay some money for it, and you get a benefit from it. So the two accounts involved are sponsorship account and bank. Oh, cash account. Sorry, right? So asset, expense, right? So I'm paying money, my asset decreases, and I'm incurring an expense, my expense increases. So 46,750. So you can maybe mention the event details if you want, who you paid and whatnot. So interestingly enough, if you notice, when you directly pay in such cases, right? So here you don't have a debtor. So typically what happens is, sorry, you don't have a creditor. Typically what happens, you have an expense, named reaction lab. So typically you have an expense, and when you incur an expense, when you make a purchase or which is an expense, you will have a creditor. A creditor you have to pay. So you know the name of the creditor, so you create an account for him. The liability increases the credit, and subsequently you pay him. So the bank asset decreases credit, and liability, which is your vendor liability, decreases debit. So you go through that model where the name of the vendor or a customer, it will be mentioned in the books of accounts. But in these cases, right, where you have direct payments, so you have an expense and you have a payment, right? You won't know the name of the person you're paying the money to. So a narration can help where you can even mention the name of the person you're paying. Okay, so we've covered around 20 transactions today. So we'll cover the rest, right? We have some interesting concepts like how income tax is treated, how GST is treated, what depreciation is, how to calculate and account for loans, many interesting things, right? So as of now, for today we're done. Any doubts up until now? Sure. One second. Yeah. You can unmute and ask your question if you want.
Hey, can you hear me?
Yeah. Go on now.
Okay. In transaction number 11,
Uh,
there is this thing called sales account, right? From where
yeah.
the money is credited. Why is it sales account and why is it not SBI account? Because it's the bank's, it's the company's account and from there it's going, right?
Okay. I'm asking. எனக்கு என்ன புரியலனா, why? What do you think it should be?
SBI account.
Okay. So if I made a sale, right?
Hmm.
So when I make a sale, let's imagine that you go to a shop. So typically, if you go to a grocery store, you you take your goods, you put it in a bag, and then he gives you a bill and you pay him money.
Yeah.
Correct.
Hmm.
But here, this transaction has not told me that I have received the money because okay, it has not told me like I can receive money via cash. Say I have three bank accounts. It does not. I'm just hypothetically saying, right? It has not given me information, or it has not given me the fact that I have received the money. So the thing is, typically we have not come to understand a purchase or a sale transaction as two things happening. We always think that sale there's money involved. You should always split a transaction into two. In this case, say for example, when you make a purchase, there are two things happening. First, you make a purchase. Second, you make a payment. It's two steps, right? Because it happens so fast in a matter of a second, it doesn't mean that there are not two things happening. So the moment he gives you a bill, right, he is telling me, okay, you have purchased from me, I'm giving you this bill, you owe me this amount. So that's the first transaction happening. Second is you look at the bill, you give him the money. So the fact is we have not been told we received the money, right? So if this transaction was made, amount received in check, and check is deposited in X account, or say Bank of India, then you can go ahead and even in that case, you should credit sales, right? You will end up debiting SBI account or
SBI.
bank or right. So the sale should be credited because you are having income from this transaction.
Yeah.
Right? You can't help that fact. Whether somebody owes you or whether somebody has already paid you and no longer owes you depends on the nation. I mean, on the transaction data. Okay.
Okay. Now I understand.
Awesome. Anybody else? You want to unmute and ask the question, Shreya? Okay. I was actually wondering why nobody asked about this. Okay, I'll give you one simple idea. Okay, so in school, especially if you're from PSBB, and I think pretty much everywhere else, they will teach you something called the golden rules of accounting. Okay, so I'll just type it out for you. Golden rules of accounting. Right? Rule number one: debit what? Not that. I'm sorry. Go on. Okay. Okay, I'll try to explain this, but I'll tell you now itself, okay? You will anyway get this answer when we come to the balance sheet, but maybe I'll try to explain it as simply as possible, okay? And I'll also inform you, okay, before I tell this, guys, there's something called golden rules of accounting, okay? There are three rules. Traditionally, they'll be used to thought, okay, it's called rule one, debit what comes in, credit what goes out. Two, debit the receiver, debit the receiver, credit the giver. Three, debit all expenses and losses, credit all incomes and gains. It's a very standard rule. And the reason I'm not using that rule is it goes like a nursery rhyme. It doesn't help you understand the movement in accounts, right? So I'm not teaching golden rules of accounting. I'm teaching some. You can call it the modern rules of accounting. I'm teaching you basic common sense. Okay, so you won't have to remember the nursery rhyme. So to answer your question, Shreya, let's say I made a sale of rupees 10 lakhs, right, to Mr. X. The transaction is I'm not receiving the money yet. Mr. X and sales. Mr. X is like he's debited, right? Sorry, and yeah, and sales is credited. He's a debtor, and say 10 lakhs, right? Now this sales in common sense, right? What is profit? Profit, as we saw, is equal to sales minus purchase, or sales cost minus purchase cost. So let's presume, I'm just like giving you an idea, okay? Let us say that for this sales transaction, the purchase cost was 7 lakhs. So logically, the profit I've made is 10 lakhs minus 7 lakhs, 3 lakhs. Now, the business, after making this profit, the business owes this profit to the owner, right? Because the business was able to make this sale by receiving money from the owner. The owner first gave us money, and with that money, we purchased machinery, we were able to employ people, we were able to purchase goods, and we were able to make the sale. Right? The business happens because of the owner. So any profit we make, profit or loss of the business is the owner's money. Right? It should be paid back to the owner. So think of the business as you can call it like a life cycle. So the business receives money from the owner. It does business. It makes profit or loss. It gives the profit or loss back to the owner, or it owes the owner. You can think of it that way. So let us say, what was the first transaction we saw? Number one, when the owner is giving me cash, right? The owner is credited, right? I call him. I use the word capital. Let's say Mr. X, right? We call it Mr. X capital, right? When I owe him, I'm crediting him, right? So logically, if I have a profit that I have to give to the owner, I'm crediting the profit, correct? Profit is to be credited to the owner, right? Profit as a okay. Again, I'll just give you a thumbs up here itself. This is just a heads up. This will be confusing now because this is a concept that I have to explain maybe in the last 5 classes. But I'm giving you a small idea, okay? So profit should be credited to the owner because the owner is a liability, a third person. So when a liability increases, my liability to the owner increases, so I credit him. So when profit is credit, it means that all incomes are credit, all expenses are debit, right? So incomes minus expenses, right? So the net value that is profit is a credit value. So that's why we credit incomes instead of debiting income. So you might think, okay, income, I'm receiving something, so I should debit it. No. When you receive an asset, you debit it. And income, however, the business receives the income. However, it has to pay that income back to the owner. So you can actually think of this transaction once we actually complete the entire accounting process, this will pretty much be a transaction which you can say Mr. X is debited and capital account is credited. Like in substance, if you notice, because I'm making a sale, I'm crediting the sale, right? And I have the sale which will ultimately, net of all my expenses, give me a profit, and that profit will anyway go to my capital, go back to my owner. So in substance, this is what happens. But we have to go through the motions. We have to mention the expenses, the sales, the individual transactions, so that we are able to present a proper picture. Okay, so this is the idea behind why we are crediting sales, and like by logic, we are debiting expenses. Are you clear, Shreya? Awesome. So Vandana, entry number 15. Why is the asset for Gyro as the money is received? Okay, 1 second. Okay. So let's look at the logic, right? So I'm receiving money from Gyro Incorporated. So we know that Gyro is my customer because I sold him goods. So first step, Gyro is my customer. So I've identified Gyro as an account. Next, because he is my customer, he is my asset. So we have received the money from him, but that does not change him into a liability. Simply put, say if you have a customer, right? He is going to have to pay you money, which means he is your debtor and he is your asset. Just because he has paid you the money, say for example, he paid 15 lakhs here, Gyro will no longer be your customer. Okay. In fact, we can actually, there are some cases where a customer can have a credit balance and the vendor can have a debit balance. But I will go into that once we start with ledger accounts. Okay. As of now, oh, I think she's left it. Wow. Okay. So the idea is Gyro is an asset because he's a customer. Any other doubts, guys? Yeah, that's actually, you're not wrong. Yeah, it does make sense, right? So initially, I sold him for, you're not able to hear me. Are others able to hear me? Vandana, can you maybe try earphones or? Okay, I'll just answer Achit first so that you're not getting lost in this. So you're right. So he had to pay me 15 lakhs. He's paid me 12 lakhs now, which means the balance is he has to pay me 3 lakhs. All there is to it. Cool. Okay, great. Guys, I'm actually going ahead and stopping now. If you have any more doubts, you can text me on WhatsApp. Okay. So your statement is, if I look at it technically, you are not wrong, right? So he was an asset with a balance of 15 lakhs. He is now an asset with a balance of 3 lakhs. So he is a lesser valuable, lesser by 12 lakhs. You're right. It's a proper statement. Okay. Vandana, can you hear me now? Okay, nonetheless, guys, it's chill. Okay. Okay. I'm not sure whether you can hear me. Okay. Did you hear my explanation for your question? No problem. That's fine. Okay, actually, how about I just call you again on direct Skype? Okay, we'll just close the glass because I'm recording as well. Not a problem. Other than that, I think it's chill. Great, guys. I will post your next assignment on the group. Please check out the group and see you next class. Okay, Wednesday 4:30. Awesome. Thanks for watching again. Whoever you are left as of now. Ah, sure, bro. No problem. Yeah, I'll add you. Okay, so I'm closing now. I'll call you back right now. Okay, both of you stay online. Okay, bye, guys.